What I do see happening is very possible is that the Fed could come in with an emergency act authorized by Congress and some kind of emergency liquidity act and seize all the gold held by banks to back futures contracts. There goes all your ETFs. There goes all the paper gold, and trying to get anything out of that, it will probably be seized from your account. If you're not timing it well and getting out and then buying physical, it's going to be very difficult to do that.
We have to decide which country we want to buy.
Hey guys, Rafa here from the End Game Investor, and today we're going to discuss why the explosion in the nickel market could be the end of the London Metals Exchange and what it tells us about what is probably going to happen to the gold and silver markets once this sort of squeeze hits those markets, and it will, which really means a dollar squeeze rather than a metal squeeze. Essentially, there are two kinds of brokers. There are brokers that match buyers with sellers and do not take a middleman position. And there are market-making brokers, which buy from sellers and sell to buyers. They make the market in the middle, and they take risks when they buy from sellers and sell to buyers. One of those risks is if the price moves way too fast, then the differential in prices is going to blow out any commissions they can get on the trades, and they could go bankrupt depending on which side of the trade they're holding at any given time. This is what happened in the nickel market. The price spiked up about 250% to $100,000 a ton, and the LME could no longer make a market in that commodity because they would have to buy from a trader who has it at 100,000 and sell it who knows where. If the price plummets from there in some kind of sell-off, then they could very easily go bankrupt in that environment. So they just shut down the exchange. Now, there is another commodity that has a market maker in between called a bullion bank that buys from sellers and sells to buyers, hence they are called the swaps, and that is the gold futures market. And at this point in time, this chart shows you the position of the bullion banks at this time in gold futures. You see here, this number 230,869, that is the net number of short contracts that the bullion banks, the market makers in the gold futures market, that is how many contracts they are short. This is an all-time record for shorts. Now, theoretically, these short contracts are backed by physical positions in the spot London market, but the danger is that the physical positions in the London spot market could be double or triple owned by ETFs and the Bank of England and the bullion trading desks that are trading in New York. If they all own them at the same time, if there's double counting, then there's going to be a serious problem with these short positions. So, judging by what happened in nickel, what happened was the exchange just shut down the trades. This is what will probably happen also in gold futures. For one reason or another, a short squeeze should begin. The bullion banks that are market makers that are buying to sellers and selling to buyers, they are not going to be able to sustain themselves on these huge price moves. And so they are probably going to ask the CME, the Chicago Mercantile Exchange that runs the COMEX, to shut down trades. And just like the LME even canceled trades for nickel, meaning they stole people's money, trades that were executed, $1.3 billion in profits were wiped out. Profits and losses on the other side were wiped out, meaning that money was just stolen by the exchange and given back to the shorters. If you expect to be making money in gold futures, that is what is going to happen when a gold squeeze occurs on the COMEX. They're going to shut down the trades, they're going to shut down the exchange, and in the days following, what's probably going to happen is there's going to be a lot of dollar nervousness. Consumer prices are going to start to climb really, really fast, really quickly by the day. The Fed is going to have to come in and stop interest rates from rising as this inflation destroys bond prices. And then what I do see happening is very possible is that the Fed could come in with an emergency act authorized by Congress and some kind of emergency liquidity act and seize all the gold held by banks to back futures contracts. There goes all your ETFs. There goes all the paper gold. And trying to get anything out of that, it will probably be seized from your account. If you're not timing it well and getting out and then buying physical, it's going to be very difficult to do that. Soviet Metal Exchange, LME, irks traders by freezing nickel market. You have here this key paragraph. But the exchange also canceled all 5,000 nickel trades that had been executed on Tuesday, worth nearly $4 billion. Mark Thompson, vice chair of Tungsten West and a longstanding trader on the LME, estimated the exchange had wiped out $1.3 billion of profit and loss on the deals. It was in the interests of the market as a whole, the LME said. Sure. That's a real commie statement. Now it quotes an upset man named Clifford Asness.
I learned that you can just add ass to anything, and then it sounds a little bit cooler.
Founder of the $140 billion fund described the LME as slime balls.
Don't move, slime ball.
He says in Twitter, I am accusing you, the LME, of reversing trades to save your favored cronies and robbing your non-crony customers, he went on. The LME denied that parent company Hong Kong Exchanges and Clearing had influenced its decision. And what is the LME doing to reopen the market? They're not reopening it. Here is an article from SP Global. LME says nickel trading will not resume March 11.
Now you listen to me. I want trading reopened right now. Get those brokers back in here. Turn those machines back on. Turn those machines back on.
The criteria to resume trading includes operational procedures to effect a safe reopening. These criteria have not been met yet, and therefore the nickel market will not reopen tomorrow. At this point, the LME might be damned if you do, damned if they don't. Because if they open up trading and the nickel price rockets again, then they'll have to suspend it again, and their entire operation will be in doubt for every metal. And if they don't open it up again, physical premiums for nickel are going to start to move higher and higher anyway. And the LME will be admitting that their markets don't work and they don't track reality anymore. This is very reminiscent of what happened to gold trading when the London gold pool collapsed in 1968. At first, it was suspended, and then gold prices outside of the gold pool started going higher and higher and higher. And after 2 weeks of suspension, the entire operation was just scrapped. This is what might actually happen to the LME in the coming days if they cannot reopen the market. Because if it can happen for nickel, it can happen for any metal. And once it hits gold and silver, the dollar will be dead. And if you own paper, gold, and silver at that point, you should expect all of that to be seized in an emergency act by Congress. And the only gold that you will be able to keep is the one is the stuff that's actually hidden under your mattress or in somewhere in your possession, in your physical possession, whether it be at a private vault, possibly, or some physical material that you will have in your possession, because they will seize everything else they can get their hands on in order to stabilize the dollar and maintain the financial system. And so what just happened in nickel is a preview of how the end game is probably going to play out for real. This is what the collapse of the London gold pool actually looked like. Here's how it happened. On 14th March 1968, exactly 54 years ago today, a Thursday evening, the United States requested of the British government that the London gold markets be closed the following day to combat the heavy demand for gold. The ad hoc declaration of the same Friday, March 15th, as a bank holiday in England by the Queen upon petition of the House of Commons, and a conference scheduled for the weekend in Washington were deemed to address the needs of the international monetary situation in order to reach a decision with regards to future gold policy. The events of the weekend led the Congress of the United States to repeal the requirement for a gold reserve to back the U.S. currency as of Monday, March 18th, 1968. The London gold market stayed closed for 2 weeks while markets in other countries continued trading with increasing gold prices. These events brought the business of the London gold pool to an end. We can see what is happening in the nickel market, and the LME nickel market itself has the same function as the London gold pool. Their purpose was to suppress gold prices by increasing the paper supply. These LME brokerages were caught in a short squeeze in nickel, means that they had more paper than physical supply available. That suppresses nickel prices, just as it suppresses gold prices. So what happened in nickel will happen to every market where the paper supply is over and above the actual physical supply. And when it happens to gold, the dollar will collapse. It's the same mechanism back then, 54 years ago, as it is now. And the same thing is going to happen. This is Rafi of the Endgame Investor, reminding you that if you ain't got physical, you ain't got nothing. And if you want to support me and see which companies that I have found, gold mining companies, that are hedged and exposed to a danger of the short squeeze in the gold market, I have found some companies that are dangerously hedged and should be sold, and others that are now unhedged and are much safer. If you want to know, please sign up for a 2-week trial of the Endgame Investor or become my patron on Patreon to get my extra videos on my biblical commentary on the Torah from a libertarian perspective. And remember, gold is money. Everything else is credit.